Welcome to the P7 lectures. First, let's see what's in the syllabus. And it starts off with the regulatory environment. And although laws do impinge on this, it is mainly IFAC, the International Federations of Accountants, and your professional body, ACCA. They lay down the international standards in auditing and also the ethical guides, which are very, very important. Professional ethical considerations you'll have met at F8, but again they come into the syllabus in a big way. Really the view is taken that without ethics, accountants and auditors are kind of nothing. That ethics is our ultimate selling proposition. If people can't believe what you say or put any credibility if you sign off a set of financial statements, what is the point in you being there, and why on earth would they give you a good fee? The ethical dilemmas at P7 tend to be a little bit less straightforward than those at F8. Practice management. How do we win clients? How do we make sure it's safe to have a certain audit client? How do we make sure that there's a system which can more or less guarantee good audits? We don't want the idea of a good audit to be luck on the auditor and the auditing team you happen to have on the day. You want there to be a quality control system which essentially guarantees that every time the firm does an audit or another assignment, that it is at a very, very high level of quality. The audit of historical financial information. This again is at F8. This is basically auditing financial statements. Here the biggest single difference is you have to look at the audit of a group of financial statements. But also in here it brings in the idea of business risk as well as just audit risk. I'll talk a little bit more about business risk in a moment. There are other assignments. This is new. You're asked by a client to maybe put your name to a cash flow forecast that the bank wants to see before it gives a loan or an overdraft to your client. Perhaps you're asked to audit environmental and social. Perhaps you are asked to do what's called a due diligence report, which is what happens when one company is taking over another. So there are a variety of other assignments which are dealt with in P7, which were not met in F8. Reporting is basically audit reports, but again, some of the issues which come up at P7 can be slightly more difficult, more sophisticated. And then a little bit on current issues and developments. The difference between P7 and P8, really the main differences are in P7 you have to know the international standards of accounting or the international financial reporting standards. Now when we say that a set of financial statements gives a true and fair view, you are not just talking about the amount of the figure, you are also saying that it complies with the relevant accounting standards or financial reporting standards, and that you have found evidence that it so complies. This is why it's very, very important that you have studied P2 before you come on to P7. You cannot do an audit if you do not know the accounting standards, because you don't know, almost by definition, what is meant by true and fair. Business risk. At F8 we met audit risk. That was the risk that you give the wrong opinion. Business risk is the risk that the business does something wrong, that it gets into some difficulty, perhaps by developing and launching a product which doesn't sell, or because maybe a computer virus has got into the IT system. Now, it's not the auditor's business or province really to run a business. It's management is looking after the strategic and operational elements which they have to govern often on a day-to-day basis to make sure that the business runs smoothly. So why are we bringing business risk, the risk, for example, of launching a product which is a flop? Why does that become relevant to auditors? And the reason is that once there is a business risk, there is nearly always a knock-on effect on audit risk. So if you have launched a product which doesn't sell well, that's the business risk, but the audit risk is how we're valuing the inventory. Or if we're selling to a company that looks as though it's not going to pay, so a bad debt or doing, if you like, bad investigation into the creditworthiness of the company is management's fault, so to speak. But obviously, if it looks as though they're selling to a company in some difficulty, it comes up on valuing the receivables. Group audits I've mentioned. How do we decide whether something is a subsidiary or an associate? How do we deal in particular with group audits where maybe a subsidiary is audited by a different firm of auditors? And we're responsible for giving our opinion on the consolidated or the group financial statements. Other types of assignment I've already mentioned. Really quite interesting sometimes, gets away from the audit of historical financial information. Very often they're kind of giving their opinions on a whole range of other areas, which can be really quite challenging. And practice management, the idea of particularly quality and quality assurance. Now there's a particular difference really in level between the answers that you're supposed to deliver at F8 and P7. Much greater sophistication and maturity is required. For example, let's say you were doing or attending a stock take, and it's a company which produces food, particularly jams and marmalades and preserved food. And during the stock take, one of the counters drops a carton, and in the carton there are jars, and one of the jars breaks. And it's obvious to everyone from the smell that the contents have gone bad. Now at F8 you might just say, well, that should be written off. But at P7 we say, well, this could be the tip of the iceberg. What could happen and happen and happen if lots of things went wrong? So what we need to do is to see, well, was it just that one jar in that packet, or is the whole packet bad? So you have to open some other jars. And then you begin to think, well, is the whole batch bad? And if you found that the problem was more widespread, you say, well, this was a problem in jam. What about problems in other products? Has something gone wrong in the manufacturing process? That maybe they're not being properly sterilized, something of that sort, and that lots and lots of the inventory is actually bad and has to be written off. And then you begin to think, well, what happens if some of these bad products or bad batches have gone to shops? Then there's a whole scenario of having to withdraw the products from the shops, reverse the sales, compensate the shops, write off the produce, and even worse, what happens if not only it's been sold to the shop, but the shop has sold it to customers, and the customers have eaten it, and the customers have fallen ill, and maybe several of them have died from food poisoning. And there the whole reputation of the company is perhaps at risk, and indeed its very going concern may now be in doubt. So from that one issue, it can really explode into a whole lot of issues, and the auditor must be prepared to follow each one down to make sure that this, as I say, isn't just the tip of the iceberg. Now you might think this is overcautious, but about 25 years ago in the UK there was a very famous, well-established brand which made and sold baby milk. So there was a powder, you could make it up, reconstitute in water, and it could be used as food for babies. And unfortunately some E. coli got into the production lines, and then the product was contaminated, it was sold, it was fed to some babies, and unfortunately several babies died. And within about 2 weeks, that company was in liquidation, because there's really no recovery of the brand or the company from the tremendous damage done to its reputation and goodwill. There is no recovery really from a situation where the company was responsible for the death of babies. The exam itself, no choice. There is a 50-mark case study, quite a large kind of scenario if you look at, dealing with syllabus areas A, B, C and D. Section B, 2 compulsory 25-mark questions, one of which will always be particularly looking at Section E, which is on, really it's an audit report to certain other reports that might be required. And note that Section G, current issues, is unlikely to give a whole question on its own. Note that the 4 professional marks for Section A, the time for the exam is 3 hours 15 minutes.